The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the May 24th, terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. More importantly, I'm here to serve you. So feel free to pick up that phone, dial on in. Would love to hear your voice, 877-927-6648. If you can't dial in, you can always send me an email, steve@tfnn.com. Just inside that subject heading, please put radio show question. Of course, inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow off 92 points, 24,794 is the print. S&P is off 6 points, trading out at 27.26. NASDAQ 100 down 7, 69.45. You've got the Russell up $1.30. The semis are up $2. Spot volatility up a couple percent, really 28 pennies, trading at 12.86. Gold is up 14 buckaroonies and change. That's up over 1%. Silver up 27 cents. That's up 1 7/10% to the upside. Light sweet crude back 11 pennies. Lead the charge to the upside. You've got Universal Corp. UVV is the ticker symbol, 28% to the upside. No idea what is behind that move, but we can find out. Mercado Libre, MELI, that's trading up 3% or $10. AutoZone up over 1%, 7 buckaroonies. You've got Align Technology up a little over 2%. That would be 7%, $7 as well. To the downside, it is Long Financial Corp. Off $21. 75%. Something smells fishy there. If you take a look at Whirlpool, painting the town red, having a bad load of laundry. Down 7.5% off $12. Luxoft Holdings down $11 or 25%. There's a couple movers and shakers, basically shakers to the downside. Lending Tree, TREE, off $8. That would be 3%. So certainly we have things to look at. The first thing I want to look at, though, was one of the requests from yesterday. There were many requests that came in. At the end of the show, we really had to kind of do the old Mazda zoom through them. And the last one was the Vanguard FTSE Europe ETF out here. That ticker symbol is VGK. And the question was by this individual who wrote in was whether they should dump it. And I don't have the email handy. I apologize. But when I take a look at VKG, and right now what we have is the daily chart. It's got its TAS market profiles. You can see prices trading right above the bottom, or right at the bottom of the box, which is 59.32. I think what we can say or suggest about this equity is right now it's just really trading in a consolidation. The consolidation, in essence, really began at the gap to the downside on February 5th. 11 million shares, so big volume to the downside there. And you'd say that the bottom of the consolidation, we're just simply going to use the lows here from April the 2nd. So this is trading kind of right in the middle. Wasn't able to bust it up to the upside. May 22nd, this equity moved up with 1.8 million shares. I don't know exactly what it's tracking. if it's just the FTSE or not. So you'd want to take a look at the indice, but let's just stick with this ETF out here. Last time that it was up at the top of the consolidation level was 2.9 million. and then just a few days ago, 1.8 million. So it's not exactly giving you the type of oomph or volume that you'd like to see. So I don't know what your time period is inside this trade. You know, to answer your question, should you cut loose? You should just know that you're up, or 2 days ago was up against some pretty significant resistance out here. From a monthly perspective, it's the top of the box at 61.89. That really has the sellers, in essence, lined up here. Center line of the box, point of control closer to the top. So we call it a bearish structured box out here. But does this itself say you should sell? Again, I don't know your horizon out here. Just know you're in a consolidation. You're up right now. You were towards the top a few days ago. You failed. You pulled back. Maybe to a level of support, could easily pull back to the bottom of the consolidation, which is in the 57 level, also the bottom of the weekly profile out there. So I just wanted to make sure that I was able to get to that. We did have another request that has come in, and from the Tigers Den, and the request was whether we could go take a look at gold priced in several currencies. And the answer is we absolutely positively can. They've got gold trading up 1440, trading out at 1304. Let's first try to figure out what is gold doing in dollars. And what we know that it's doing, as we put this chart, this is the daily time frame chart. The daily time frame chart has our TAS market profiles, and gold is doing exactly what you expected it to do based on the new profile that formed 2 days ago. I mean, this thing is listening to you exactly. I know that when this profile formed, and we'll take a look at that profile. Let me just turn off the A to B equals CD pattern, so we'll just clean up this chart just a tad. You looked at that box and you said, you know, Steve, look at the formation of that box. It is a bullish structured box, even though gold had pulled back, careened to the downside May 14th, 15th, something like that. But you said, you know, Steve, if price stays inside this box, the bottom of which is 1291.30, because that center line is closer to the bottom at 1295.80, buyers here have every ability to go test the top of the box, 1304.80. And voila, where are we trading at right now? 1303.80. Doesn't tell us whether or not they're going to be able to bust through that level, but price has done nothing more than what it should have done, in essence, which is test resistance. Yeah, that's all it's done. Now, test resistance, if it closes above that level, maybe there's something to the move. Maybe, in fact, you know, this washout, so to speak, on, what was the trading day right here, on May the 15th, maybe that's all it was a washout of traders that were long the gold contract out here, speculators, whatever it might be. We don't need to speculate on that. We don't have to speculate. Gold's trading right now in a range. That range is 1291 to 1304.80 to be exact. You close above 1304.80, says you've got more room to the upside, and maybe there was a bottom a few days ago. Wouldn't be surprised to see gold push its way back to 1291.30. What happens if you close below 1291.30? Well, you can expect much lower price. How much lower, you say? I'd say 1246, 1223. Forget about that 1265 target. We come back from this break. We'll go see what gold's doing in euros. We'll look at it in yen. We'll look at it in pounds. You can look at it any currency you want. Steve Rhodes with TFNN. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we're taking a look at Goldilocks out here, and this is a chart, for those of you familiar with the show, been watching the show, that we look at from time to time, the top portion of the chart. And by the way, it's a line chart, which means we're only looking at the closing price of gold. Right now, you can see trading at $1304.60 in dollars. The chart on the bottom is priced in euros, and that's trading at 11.11, about 11.1170, 60, right around that area. And so what's interesting here, another price point for you to be watching for gold price in U.S. dollars is 1305.20, which on a closing basis happened to be the low from March the 1st out here. We can see from a consolidation standpoint how that level was tested back here right around May the 5th. Now, because of that consolidation, that really gives you a measured move, a potential measured move out here. And that's really what was the signal when gold busted through that consolidation. You can, oops, let me just try to move that box over here so you can see it. And you can see that price never got down to that level, that measured move in the 1245 area. So what gold is trying to do, one of the tools that Tom likes to teach out there, not that I'm teaching you his tools, but you hear him talk about get back inside the range. Well, on a closing basis, in order for gold to say, okay, that was a flush to the downside on May the 15th out here, you want to see it get back inside the range. So that means close today above 1305.20, you know, 60 cents away or something like that, 40 cents away from where it is that we're trading right now. But it's on a closing basis that will be key. Now, we would look at this chart here priced in euros, gold in euros, and say, hey, aha, we have a breakout. We got a breakout. Gold in dollars must be finding a bottom. And maybe that's the case. But Lee Corso would say, not so fast out here, right? You know you've got the market profile that gold has to close above. That's level one. I'd also go ahead and say getting back inside the range would be level 2 out here. And then you really want to see gold trading higher in multiple currencies. So the request was to go take a look at gold price and other currencies out here. Let's start with the gold traders over in the UK. At this stage here, they're not having a dance party. They're just watching gold priced in Great British pounds, and they're saying, you know, at this stage here, nothing doing. Needs to close above the high from January 10th. You might ask me what that price is, and I will tell you as soon as I turn on my data window. So what you're looking for with regard to a breakout party going on, a confirmation of that, with regard to gold in pounds, we're talking about 979.60. We're at 974 as we speak right now. So price running into resistance. So let me get this straight. You've got gold running into resistance at the top of its TAS daily profile. You've got it running into resistance at the bottom of the level that it has to get back to a consolidation pattern on a closing basis. In pounds, you're running into what looks like resistance, a prior swing point out there. Okay, so we have those three pieces of information. What's gold doing in yen? And the answer I like to give is not much. Not doing diddly, bo diddly out here. So we don't have any type of, hey, the folks over in Japan that are gold traders, they're not exactly saying, hey, this is a wonderful breakout move. There's just nothing here signaling that that is the case. That is what you want to see, either to the upside or to the downside. You want to see what traders, what global flows of capital are doing with, in this case here, this commodity. So you're not getting a confirmation. So that's like 4 strikes with regard to gold out here. The only ones that are throwing a bit of a party are those folks that are trading in euros, and this is not over yet today. The most prior swing point was just a few days ago. And that prior swing point, the exact number, let me give you that as well as we put up the data window. That high was 11. Well, I have to actually see the number to give it to you. That really was 11.0930. You're at 11.11 and change out here. But in essence, the real breakout party for gold and euros now, the way that we should look at it is really going to be the swing point from September in 2017. Yeah, sure, maybe we have gold priced in euros breaking out, so that would be one of the 5, or of the 5 signals that you and I are looking at. So how do we call this? We say at this stage of the game, at 1:23 in the afternoon, we probably don't have all of the pieces of information. And what we want to see is what happens today with regard to the close. It would not surprise me to see gold close underneath these resistant levels and then go ahead and pull back and continue to move sideways. I wish the charts information here provided us with more information, but this is the information that they provide us with. And so there is Stevie's call at this stage of the game. So thanks for the request. Hopefully that information is helpful to you. Let's go talk about, I don't see any other questions that have come in, so please fire those questions up just like yesterday. Yeah, because there were a slew that came in all at one time, which kept me on my toes. I like being kept on my toes. So the question is now, yeah, what are the markets doing? What happened to that flush to the downside out here? Oh, I know what I wanted to do. One of the things that I was noticing, because there was a question. Remember, there was a question last week. And the question was, will the energy sector go ahead and lead us up? Now, the energy sector, the XLE, if we just take a quick peek at it here, don't worry, I'll get it out. We know that this thing has been moving higher ever since really about the early April 2nd. April 2nd, when the S&P probably made its most recent swing point low. So too did the energy sector, only the energy sector really took off to the upside. Now, if we just look at the XLE, the energy sector, you'll see today price is trading right down around the bottom of its daily profile out here. That profile level to watch is 76.85 for those of you that are long the XLE. We haven't seen it close below bottom of a box in quite some time out here. In fact, last time we saw it close below bottom of a box was back here on February the 2nd. That's when it began. In essence, you know what it is that I'm saying to you. So I'd say, you know, might as well watch 76.85. You're trading at 76.88 right now. That's a daily time frame chart. The week doesn't end till tomorrow, obviously. You don't have to pay me extra for that piece of information. What you do have to pay me extra for is, this is interesting. Because when the question came in, will the energy sector lead us up? Now what we have is evidence that the energy sector is ready to take a break. Because you see, when markets make significant bottoms and tops out here, they do it with Stevie's momentum pattern. You can see here, if we go back and take a look at the last significant bottom out here inside of the energy sector, this is a weekly chart that you and I are looking at. All you have to do is come back to January 22nd, 2016, when it made that nice little hammer candle. Of course, you got a confirmation the following week when price closed over Stevie's red line that was a solid bottom. Now we fast forward to where we're at today. Not only did we have a most recent top on December 16th, being the time to mark sequential sell signal, which eventually we got that message. Looks like that came in on January 6th, or certainly on January 13th, the week of. These are weekly charts that we're taking a look at. Well, now, as price got back up towards those levels, now what we have going on this week, again, it's going to require us to get information tomorrow. Tomorrow's close. You've got a key reversal week. That's for sure. So whether this turns out to be a bearish engulfing candle for the week or not, you already have your key reversal session. What does this say? This says the energy sector, if you're long, it's okay to stay long, but you should anticipate that it's at least going to pull back to Stevie's red line on a weekly basis, and that's about $5, $4, $3. The exact number is $73.79. You do the math. Looks to me like it's $3.11 to the downside. Steve Rhodes.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Right now we've got the Dow trading off 76. S&P is down 5. We're going to go out to Newport Beach, California, and speak with Garo. Garo, thanks for calling. Thanks for holding. How are you today?
Good. How about you, sir?
Very good. Thank you so much for asking. And today you want to talk about the VanEck Vectors Oil Services ETF, right now trading out at 28.35. Why don't you share with folks how it is that I can help you?
According to what you said about a minute ago regarding the oil that's going to drop to another $7-8 on the downside.
Yes.
What do you think that OIH? How much do you think the OIH will drop down to?
I would use the price point right now of 26.79. Now here I'm going to put the same chart in essence that I was using for the XLE. Now the XLE, has given us a little bit better of a bearish reversal signal, as of 1:30 in the afternoon on Thursday. Again, it just depends on tomorrow's close and what that candle looks like, because that was a key reversal session where the previous week's high, previous week's low has been exceeded, and it's also a bearish reversal candle. Here we just have a dark cloud cover, and so for some reason the OIH isn't as bearish, so to speak, as the XLE, the energy sector. Because even when I take a look at this weekly time frame chart up here, it's come back to a resistance area, getting back to January 19th. But to answer your question specifically, Garo, is if this is going to follow along as the energy sector, my red line is the number I would first use, which is 26.79. Then I'd come over with you and take a look at your time frame chart, or your chart here, which uses the parabolic SAR system. But if I put this on a weekly time frame, because I was looking at a weekly chart, this is still in the bullish mode out here, with prices coming and testing your 5-week, in this case here, simple moving average. But you were calling about were you calling about the OIH because of my comment about XLE, or for something else that or another reason that you were looking at when you looked at the charts?
Regarding XLE, XLE actually is a combination of 8 or 9 oil companies, the big giants.
True.
But OIH is somehow related to the crude. You see, if crude is going to go down, it's going to affect on OIH too, right?
Yeah. And today on a daily basis, you've got your first, reversal from your parabolic SAR system on a daily time frame chart. And
yes, that is good.
Yeah, so that being the case, what are you looking at on this, or how would you look at this chart?
To me, it's going to go up to the weekly chart. It's going to go up to 200-day moving average, which is 31.10, and then it's going to reverse down.
Got it. Okay, on the weekly.
You see, that's my translation, because I have 3 dots at the bottom, which it happened 3 days ago. It got bull.
3 weeks ago.
On a weekly chart. You see?
Yes.
So I think it has room to go higher before it rolls down. Maybe I can be wrong. I can be wrong. But the way that it shows is like so. It may roll down tomorrow, you see, without going to hit that 31.10 or in that neighborhood.
So how do you, so this is a great question, because the weekly chart, as we both say, using certainly the parabolic SAR system, is still bullish. Yet on the daily time frame today, you've got a flip to potentially the bearish side, or at least a pullback. So how do you reconcile that?
To me, the daily chart, the first dot went up today.
Yes.
You see, it hit the 21 days. The candle hit the 21 day, and the dot was there, so the dot went up. But to me, it sounds like that was a consolidation. It is not a bearish sign. It just corrected itself, and from here, it's on the way up. Because this happened the same thing around by beginning of May, that it came and it hit that 21 day, and we had 4 dots at the top, which was started at the beginning of May, and then the last candle was hit on 21 day was 8th of May, and from that day it just bounced up and it went up.
Absolutely, and I can see it. And even if I look at my other charts out here, you know, I can see exactly what it is that you're saying. It's just that on a weekly basis, and the week does not end until tomorrow, we're back up to resistance levels where the XLE, just looking at the XLE, where it's failed before. And the way that the markets form tops, these early warning signals, and just as you pointed out, look, this pattern works amazingly well, but it also fails. But at this stage here, it works so well that right now this is telling me that that stretched market inside the energy sector is getting ready to pull back. I wouldn't exactly consider this to be anything substantial, going from 60s to basically 80, and right now only pulling back $3 more to 73, 78 as an example out here. So that's what I see at this stage, and it can still accomplish both things. It can pull back and then just simply move higher. Same thing with the OIH out here, although it is the XLE that is the chart that has the more bearish pattern. And as you pointed out, you know, pretty much consolidated into 8 or 9 companies. Really, the top 3 or 4 is over 50% of the weighting inside of the energy sector out here, whereas the OIH has got many more components inside of it. So it's the energy the XLE, that has the more bearish pattern to me versus the OIH.
Yes, that is true. The daily chart of XLE is very, very similar. The pattern.
It is, yeah.
With OIH, you see, and XLE, we have the first dot up today. You see?
Yeah.
But the weekly chart on XLE is much better than OIH because the candles are all the way above the all moving averages. You see?
Sure.
When there's
I do.
no moving average on top of it, that means that there aren't very many shorts there. If it's a short, it's a very temporary short. The main shorts are out when the candle released, and it shoot that 5-day, it shoot up on the 200-day, which was on the 4th of 23rd of January, February, March, April.
Right. Yeah, no, I see that. I see that.
Yeah, we're just orchestrating or translating things on different patterns. I mean, to me, those 200 days is so important. Even though about few weeks ago, before on January the 29th, the same pattern happened, but it failed. You see, the candles went all above the all-moving averages, but again, it just dropped down all the way to $64.
Sure.
From $78. You see, this may happen again too.
It may. That's why I say,
sure.
That's why I say a $3 pullback in the XLE. It's really not that big of a deal. Hey, Garo, we're headed to a break here right now. You're welcome to hang on, and we can go take a look at anything that you'd like as well. If not, thanks so much for calling.
Thank you, sir.
Rhodes,
thank you so much. Bye-bye.
You bet. Steve Rhodes with TFNN. Dow's off 80 points. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So even though it wasn't really a question, one of our dinners had posted Maria up in New York had posted a question really about the NQ, and she's wondering some things about the NQ just as I am out here. If we take a look at the NQ, and you had mentioned a 30-minute chart, and I'm going to go ahead, Maria, if it's okay with you, kind of go back and forth between the 30-minute, 60-minute, and the daily out there to try to answer the question. The question was basically wondering, is the NQ here on a 30-minute basis, it's trying to form an A to B equals CD to the upside. So what that would look like, or approximately, we'll draw that pattern in. It would look like this, and it would give you a price projection. This chart here, it's always a little bit more difficult for me to do that because I got to squeeze it. But the question was, will it go on to make that A to B equals CD into the 70-30 level? And it's a great question, and it certainly is a possibility because the low, so first of all, you had a nice run yesterday morning up into a high at about 4 o'clock this morning. And then the pullback that we saw inside the market, even though I don't have it measured here, what is kind of measured, you just can't really see it. It was like an exact 61.8%. I don't mean like close. I mean like exact out there, Fibonacci retracement. So that could set up the A to B equals CD to the upside out here on the 30-minute chart. Real resistance, so at this stage here, if that's going to happen, Maria, what I would say is that other than being able to cross the B point out here, the high from 3:30 last night, I'd really be watching the high of the trading session at 10 o'clock this morning. Now, that high, by the way, is 69.6850. If you close above that, then I think your wonderment conclusion, so to speak, is in play. 30-minute basis, we saw the price oscillator got down really close to zero, and then price is now above it. We're testing it again out here. So nothing conclusive, but it keeps open that 70-30 possibility. Resistance, yeah, most people would say resistance is going to be the high from 3:30. At this stage here, Stevie says no. The actual resistance out here, or the go, no-go level, becomes the high from 10 o'clock this morning. Now, that's on a 30-minute basis. If I go to a 60-minute, and somebody might ask, well, why are you going to a 60-minute chart? Well, the reason is because what I can do for each of you out there is report on what the market breadth looks like on a 60-minute basis inside the entire NASDAQ 100. Or really, it's not 100, is it? It's 46, 66, 103, 103, 105. Yeah, it looks like about 105. So it's 105 or 106 issues, 2, 6, 8, 104. Sometimes my math is a little fuzzy. But what we can see as we speak right now, this is at 1:45 in the afternoon, you have 37 issues that are trading above the top of a 60-minute box and 20 below. That's pretty good. It's almost 2 to 1, so market breadth would be strong enough to support Maria's conclusion. That's a 60-minute time frame. What's going on the 4-hour time frame? Still bullish, 37% above. A 240-minute profile, 21% below. Daily basis, it's bullish, 31% above, 13 below. Weekly basis, 29% above, 18 below. So you've got basically bullish sets of market breadth profiles out here that would also go ahead and support that. What else would we need to see? Well, in order for that A to B equals CD pattern to unfold, the 60-minute chart as a profile, and that says at the top of the box, the 69.75 level, the actual B point, becomes resistance. So I suppose if you were to see price close above that at any point in time in the trading session today, early in the morning, tonight, tomorrow morning, whatever it might be, then yeah, your conclusion would make the hypothesis is a lot of sense. Now, 70-30 could be a stretch out there. Right, so I know that you trade options and you like to trade 70-32 or 70-30, the A to B equals CD pattern, may be a stretch. Because if you were going to try to take that side of the trade, you'd certainly want to be focused on and paying attention to the top of its daily profile. And that's at 70-13.50. So even though there is the potential for an A to B equals CD on the NQ on the 30-minute time frame, although potential because that has not taken out a swing, the B point of the A to B equals CD. I would say 70-13.50 is more likely where you would see some real resistance. At least if this were to unfold through tomorrow, this would probably be it. And why would Maria be looking at it? And I think it's a good thing to look at. One of the reasons might be, I have to switch charts here, workspaces, so just give me one moment to do that. But it's basically because this is another day where the NQ is testing and rejecting Stevie's red line. It's just that simple. I mean, we have seen ever since the NQ was able to get its price oscillator above zero, May the 9th out here. We have seen 1, 2, 3, 4, 5 tests. So sellers have had the opportunity 5 different times to drive price below Stevie's red line. To drop it below Stevie's red line to say that this Gartley sell pattern that is in here, that Gartley sell pattern that confirmed with the shooting star, but you cannot take this pattern on a daily basis from a swing point standpoint, from a swing trade standpoint, and go short. It is not written on the chart. I don't know, what the hell do you mean? I said heck. I said heck, didn't I? What do you mean by that? What I mean by that is this is an absolute sell pattern. It would be textbook. Without Stevie's red line, you would absolutely have entered that trade out there and said, started licking your chops and say, I caught this one. But with Stevie's red line, what is so important is that you have a invisible, not so invisible because it's on our charts, level of support out here that you had not seen before. And you would have said to yourself, you know what? I like putting the probability. You like to master probability, and you put those probabilities on your side. And what you hate is you hate getting faked out. And so you're no longer going to put up with taking trades that don't prove themselves to you. At least get it to prove itself to you. Garo makes his trades, even when he gets his signal, he makes the market prove itself to him. He's got a great set of tools utilizing his simple moving averages in addition to the parabolic SARs out there, and he waits and says, I'm going to make you prove to me that the signal you just initiated is really a real signal. Even with that, We can still be wrong on the trade because the market can do anything that it wants to do. But at this stage, the sell pattern has done nothing more than send price down to support. Yesterday, it looked very ominous. Even today, it looked kind of ominous too. But what we know at this stage of the game is Stevie's red line is an incredible tool out here, and it has acted as support every time sellers have tried to crush this pattern to the downside. And they really should be the ones in control. But I've got to tell you, they're not. Now, the upside could be very limited. The upside inside of the NQ on this chart, and it was 70.13 with regard to its TAS profiles, this comes in at 71.01. So those would be kind of the areas if you're going to try to play this to the upside. We are getting towards a holiday weekend. The sellers have basically failed the entire week. If they failed, maybe they're just going to fold them and come back and try it on Tuesday. Steve Rhodes with TFNN. I'll be with you tomorrow, though. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TFNN Memorial Day Tiger Dollar Special has just been announced. For 1 week only, we're doubling the bonuses that we normally give out with any Tiger Dollar purchase. Normally, when you purchase Tiger Dollars, you can receive a 10, 15, or 20% bonus with your purchase, but through Memorial Day only, we've doubled the bonuses to 20, 30, and even 40%. This is one of the best Tiger Dollar sales that we offer, and they only come around a couple times a year, so don't let it pass you by. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire. So whether you're already a subscriber and want to add savings to your monthly or yearly subscription, or you're thinking about signing up for anything in the future, now is a great time to get your Tiger Dollars. For all the details on the Memorial Day Tiger Dollar Special, visit the front page of TFNN.com before this deal ends May 28th.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So you missed it. It's a good thing that the camera was off because I just had one of those Tula Portocalis moments. Do you know what I'm saying when I say a Tula Portocalis moment? I've got these headphones in so that I can hear, the commercials. If Garo calls, I can speak to him. And for the most part, we don't step on each other. That's from one of my favorite movies, My Big Fat Greek Wedding Out There. Do you remember the scene when she has, I think she's got a headphone in, as a matter of fact, right? And of course, she's looking at some, her beau to be or what have you. And she starts walking for again. She has it in, and the headphone just catches and it knocks her to the floor. Well, on my chair here, the wires kind of run behind my chair, and apparently I rolled over it to the backside, and I went to move my head, and it just simply got yanked. So it just reminded me of a Tula Portocalis moment out there. Of course, that's probably too much information for you. Let's take the last minute here and answer Phil's question. Phil just got into solar edge technology, and he did that because of the daily chart out here catching the 50-day exponential moving average. That, in essence, is this blue line on my chart. Phil was wondering how that matches up with what I look at. Similar to what Garo and I talked about in the XLE. This has a topping pattern in it. Topping pattern. It's got a Tom DeMark setup, 9 count out here. It has everything to say that this wants to pull back further below the 50-day exponential moving average. At least at a minimum on this chart here, I would be looking at the May 5th low out here. I'm not telling you to sell it. You asked me a question. How does it line up? Not so much that it came back and held the 50-day. That's not what concerns me, as on the trading session of May 23rd, that confirmed the topping pattern. And then the very next day, it gaps down, another bearish signal, does so with some decent volume. You have really good volume that it's going into, so I can understand why it held here. But this has a topping pattern in there. And so is the 50-day going to hold? I don't know. I wish it didn't have that topping signal that works so well, just like it did on the NQ 30-minute chart that went into effect at 4 this morning. It didn't know that Trump was going to do the takeaway sale for Kim Jong-un. Hey, folks, stay tuned. David White's up next. Because it's Terrific Thursday, you've got Tom O'Brien and Andy Heck. And I'll be back with you on Fantastic Friday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.